Hello and welcome to a brand new episode of Fintech Ki Baat Dil Se. Today we have with us Mr. Aditya Damani, who's the founder of CreditFair. Hey Aditya, thank you so much for joining us today on this brand new episode. And we would love to hear from you more about what do you think about the lending landscape of India, as well as how is CreditFair revolutionizing it. Over to you, if you can quickly give us a quick background of yourself as well as what CreditFair does.
Great. Thanks so much, Shreyas and Sagrika, for having me. Pleasure to be on this show. Really enjoyed all the work you all have been doing on encouraging more knowledge sharing about fintech.
Thank you.
My background, I've been in financial services throughout my career. I grew up in a family of entrepreneurs who've always been in the finance space. Always grown up about thinking about investments, about business. And then I did my undergrad studies at Northwestern University in engineering and economics in the US. So while working there, I was while studying there rather, I was surprised that I just got a credit card in the mail. And, that's just mentioning that it kind of stuck in my mind. And, while I was studying, I was also part-time, and I found that credit card to be so helpful that I could manage my spends without asking my parents for money all the time. So then after that, I worked in a large debt asset management company called PIMCO. Okay. So they manage over $1 trillion in assets, got a very good exposure on the debt markets, and realized that the debt markets are actually a lot bigger than equity markets, but it wasn't the case in India. So wanted to kind of explore it further, came back to India in 2008, joined my family's equity investments business, and kind of dug deeper into the debt markets and private equity in startups in fintech and otherwise. Advised a few private equity funds who are setting up lending businesses, as well as a fintech company get acquired by its global counterpart in the payment space. So that got me, I think, bitten by the bug of entrepreneurship. I decided to move away from being an investor or an advisor to an operator. But to make that transition, I just felt like I required more hands-on experience. I required a bit more, operational knowledge. So did an MBA at London Business School to broaden my skills. Spent a bit of time in fintech companies in London, like TransferWise, a neobank called Tandem Bank. And then worked for a year and a half in a consumer lending company there called Oakham. And then moved back in 2018 and started up CreditFair. So that's my personal journey before CreditFair. And after starting up it in 2018, we've been focused on a point of sale based lending approach, similar to Bajaj Finance, but focusing on a few verticals like healthcare and education.
If I could stop you right here,
sure, please.
Could you, for our audiences, elaborate a bit more on what a point of sale approach is?
Of course. Yeah. So maybe the audience would be quite familiar with buy now, pay later. So ultimately, you're using buy now, pay later while you're checking out at the merchant or online or offline, right? Where you want to make a purchase. Right. So that's what we do, but only for education and healthcare merchants.
Got it. Okay.
Yeah. When I was working in London at Oakham, they were a new to credit focused lender for the UK market. And I saw I took away 3 takeaways from there. So one was, the way you underwrite is important, but the way you originate is also as important, which was not the common knowledge back in 2017-18. Right. So that's why I decided on this whole BNPL point of sale driven model, because we offer, that you're attracting customers who have a specific end use in mind. And we're offering a convenience product, not just someone who's desperately in need for money.
True.
Secondly, working at Oakham, realized that new to credit is a much better segment as compared to subprime. So, India is obviously one of the best markets for new to credit. So decided to move back. And thirdly, I saw a lot of models that were coming up where there was a lot of burn happening, frankly, and there was not enough focus on unit economics. And I think for a sustainable lending model, we need to have a strong handle on unit economics. So, those were the three things that sort of I took away before starting up CreditFair, and decided on this buy now, pay later model for education, healthcare, because the ticket sizes are bigger. So, since the ticket size is bigger, you can be profitable on every loan.
Got it. So one question on what you spoke about, it is as important as to how do you originate the customer as it is on the kind of underwriting that you do, right? So could you elaborate a bit more on that, like use case?
Sure. Sure, of course. It's there's something called asymmetric selection, right, in economics. So basically, you might want to attract a certain type of customer, but you might attract only the ones who you want to avoid. And that is a big problem in industries like insurance, in lending, because you want to give money to someone who can afford to pay you back, but the people who need money are actually desperate for credit and they cannot necessarily afford to pay you back. Or in insurance, you don't want to only underwrite people who will end up using the policy. You need a mix, right?
Exactly.
So that's what I mean by the way you originate is as important as the way you underwrite. And with sort of by offering no-cost EMIs, which I think Bajaj has been the pioneer in India and done it really well. I think that model has been working because a lot of people are availing a loan for convenience and not because they're desperately needing money.
Right, definitely. That makes a lot of sense.
Aditya, just to go back on your journey, right? I'm very curious. Most of the entrepreneurs we've met are people who take a plunge into entrepreneurship, right away. Like as soon as you said the bug of entrepreneurship got you, as soon as that happens, they take a plunge. But you have quite a lot of planned out session by going and taking an MBA first. And I'm not sure if you can just elaborate on, did you already have a CreditFair kind of model in mind when you were taking MBA, or did it happen over the journey? What exactly motivated you to start CreditFair, right? Or just a little bit on that part.
No, happy to talk about it. I don't think it's sometimes entrepreneurship is romanticized more in the media than what happens behind the scenes. So I actually, when I moved back in 2008 from the US to India to join my family business, I did get my first sort of taste of entrepreneurship because there was no structured job. I mean, I had to figure out a new business line that I had to set up in my family business. And so it was a bit of an intrapreneurial role, you can say. Like I didn't have to go out and seek funds, etc. But I did have to come up with a new business sort of all on my own. And it was a tough journey. I didn't think that I was well prepared. I think just plunging into that, without having enough research or enough sort of just being mentally prepared, basically, I don't think it was the right decision. So based on that experience, I in 2013, 14, when I did want to move out of investing and sort of iBanking, what I was doing for my family business, I just wanted to have a very clear, I wanted to have that mental clarity before taking the plunge again. I didn't have I wasn't sure that I'd be doing CreditFair. And that's where I thought the MBA will help me figure it out because I'll meet so many people. I'll got to do internships both on VC as well as, in startup and Fintech. So I think the hands-on experience actually helped me figure out what I want to do and ultimately start CreditFair. So you can say the founder market fit, as is often referred to by VCs. So I think that whole phase for me was figuring out that founder market fit, basically.
And you mentioned you came across, I think when you were working in the UK, you came across the different models that happened in credit and then implemented it to India, right? So what has the response been like, because UK and India are very different market when it comes to credit. So
Sure.
How did you go about that, transiting the whole UK problem to maybe solve in India?
Yeah, so I think the basics of lending sort of remain the same. whichever part of the world you're in. So for me, that was great. The takeaways on, how should you do your borrower acquisition, how should you do the underwriting, how do we engage a customer to ensure there's good collections. So I think those key takeaways were kind of timeless lessons that I got. But of course, the market is very different. The problems are very different. UK is quite well banked, quite well served. The number of people with access to multiple credit cards and multiple trade lines is already there, right? Whereas in India, it's the opposite problem, where only 2-3% of people really have a credit card. Still only 20 odd percent of people have a good enough history and footprint on the credit bureau. So I think at least the whole new to credit underwriting and the way my employer at the time, Oakham, approached it, that was a really helpful lesson. And then I had to just adapt it for the Indian market.
So what do you think?
So one thing that I really want to understand is when you started CreditFair, what was essentially the problem treatment that was in your mind? Like, this is the problem treatment that I've identified and this is what I'm going for. Like, what was the laser focus of yours?
Sure. So for me, the focus was, I'm fortunate to come from a family, that had access to the financial markets. A big believer in financial markets, and we became part of the equity market, and then of course of the banking system. But still, there are, in our estimate, 500 million Indians who really need to come up the credit ladder. So that was the big vision that I was looking to solve for. That how can we get millions of more Indians to either enter or move up the formal credit ladder. Now, how do you do that was, how do you actually attract people, like I said, who are, who can get access to credit in a way, also while, of course, maintaining low delinquencies, right? And having that positive selection. So the tactic was to go through the BNPL route. But yeah, the ultimate problem to solve was just let's get more and more Indians to be Atmanirbhar, right? In a financial sense.
Understood. And since when you started CreditFair till now, how have you seen the digital lending landscape evolve, and what has been the most drastic change that you've observed?
Right. I think there's so when we started off, there was a lot more focus on SMEs. I felt like there were a lot more players in the whole SME space, and in consumer lending, I still feel like there weren't that many players and that much focus. Or there were players, but they, I guess, didn't really have a good experience in terms of collections and all that. So, I think that has really evolved in the last few years. Consumer has also grown a lot. And the vertical focus in within different categories has increased a lot. So within the whole lending landscape that's something I would highlight. Secondly, embedded lending is increasing a lot. So in the last 3-4 years, we've definitely seen a lot more partnerships between so many tech platforms and as well as banks or NBFC or Fintech lenders like us, where everyone is looking to partner to kind of create solutions. And that is the way monetization is, that's the key monetization route that players are looking at.
Right. And what are your thoughts on the, Zomato-like model, right? Wherein those guys are themselves becoming NBFCs or either co-lending and then basically, giving out loans to the target audience to create a more of a hook for them, right? Sure. So that they don't move on to Swiggy or something like that. So they are doing what is known as revenue-based financing for restaurants, and they are also helping them scale up. Similarly, you also see these things cropping up with Ola and Uber guys, right? Wherein Ola is now helping fund drivers, they're giving them personal loans, insurances and all of that. So how do you feel about that kind of use case specific lending?
Yeah, I think this is great. And we hope that we see more and more of it because ultimately, if the use case is very well defined, the end use of money is well defined, if there's a win-win situation, for multiple parties, that's when we will see very effective lending and effective collections as well, right? Now, someone like a Zomato or a Ola, they already have a very large user base. The cash flows of those users is also sort of going through these platforms. So it's a very natural fit for monetization as well as engagement within their ecosystem. And I think we will keep seeing more and more of that. But I do also think that while Zomato might have made an NBFC, I mean, they will want to kind of keep an option open. But I still feel these are very operationally intensive, credit collection intensive models, and there will be specialists who on the back end will help Zomato and Ola solve this problem.
No, fair enough. Fair enough. Okay. Yes, Sagarika, you're asking something?
Just had a question. She just happened to mention Zomato, and that got me thinking. I think after COVID, if you open apps like Zomato, Swiggy, or any e-commerce app in that case, all of a sudden you're seeing these new age fintech lending popping up, right? Even in terms of credit cards or BNPL or whatnot, right? So what are your views on how I mean, it's a very generic kind of a question, and maybe a little late in time, but still it's very important on how India has moved during COVID in terms of lending. So your views on that?
Yeah, I mean, I think COVID has been a boon in disguise, at least we can say, for most tech-driven industries, including fintech. So the adoption that was expected over 5 or 7 years has probably happened in 2 years, right? So the number of people who are paying cash on delivery would have reduced a lot during COVID, and the whole digital money adoption has kept increasing. So yeah, I think because of that, fintechs are benefiting, and that's also where whether it's a BNPL card like a Uni or a Slice, or credit cards are being seeing much better adoption. So I think it's great, and where we see a lot of more of them on the apps is because that's the engagement strategy for all these companies. So everyone wants to be on top of mind for the consumer, so they need to be present on these platforms.
All right. That's really interesting. One more thing that I really wanted to talk to you about is the alternative investment spectrum. Specifically when it comes to, let's say, P2P lending. I think guys like Faircent and all those people have made a lot of name over there. And personally, I've also invested in that specific sector through aggregators like Cube and all of that.
Mm-hmm.
So these sectors, since they were very nascent, or let's say when COVID started, or let's say back in 2019, how do you think the entire pandemic piece impacted that first? And the secondly, I would also want you to address, how do you think, which segment do you think will pick that investment first? Like, do you think millennials or Gen Z, or do you think even older segments will start picking it up?
Right. So, sorry, just to repeat, the first question was, what is the view on the alternative investments landscape? Or how's that increased because of
the impact of pandemic on it?
Yeah. So I think the impact of pandemic is that at least in 2020, 2021, people were stuck at home, or many people moved to their hometowns, right? So they saved so much money on rent and other expenses that there was a big boom in investments in general. So much money flew into the stock market, and people had already done SIPs. On top of it, they're investing more money into the stock market. So they're like wondering, I need to put my eggs in multiple baskets, right? And I think that really, COVID has definitely helped alternative investments as well. Because of COVID, like I said, the savings rate shot up. So people had more money than they knew what to do with. And at the same time, since everything is getting more digital, so people don't want to invest in cash-driven assets like a real estate or gold. They would rather invest in new age assets which are coming up.
Understood. But what would have been the returns like? So let's say for someone like a P2P this thing, and since they are either catering to pseudo prime or near prime kind of a customer, How would you think that would have affected their returns? Like, were their investments safe during that period, or was there a bit of a sentiment of fear in the market?
So there is a wide spectrum of risk, and I think it's important that investors understand it better. I think a lot of education is required there. So you do have a few platforms, for example, where even Cred has launched Mint, right? And they are trying to only target the super prime users who are Cred users as the borrowers. And then they are giving 9%. And then on the other end, you have a lot of other P2Ps who might have even promised like 18-20% based on, riskier profiles. And I think what we feel is, frankly, most retail investors aren't interested enough to really educate themselves to identify each and every borrower correctly. So what is required is actually more of a portfolio manager, like a PMS for loans. So that you just tell me that I'm okay with this risk spectrum and this return, and like help me spread my money across hundreds of borrowers, so that my risk of defaults reduces a lot. So I think that is where we expect P2P to continue to evolve. And in the past, though, of course, in 2020 there was a scare. People were really worried what's going to happen. The government the RBI had started the moratorium option. So no one knew like how the cash flows will come. So I think initial April, May, there were months, and of worries by the retail investor, as well as the P2Ps focusing on SMEs, right? I think they were very badly affected. So I think there's been sour note sort of for investors. But at the same time, a lot of platforms like us, which were focused on more of near prime and prime borrowers, and with defined end users, more of salaried customers, we actually saw very good collections and only a little bit of increase in NPA. So there was a big diversion of sort of haves and have-nots, and some platforms were able to give good returns, but many did not give a good return.
Understood. And I think a major savior here. Sorry, go ahead, Sagar.
One question on the P2P side. I have come across a lot of people who fall in the category of prime, pseudo prime, but are not aware of P2P as an investment class, right? So more of a naive question on how does me as an investor exactly know when should I invest in P2P, or what motivates me to invest into P2P, right? If you can throw some light on that.
I think a lot more education, like I said, needs to be done on that. And I guess the way people should think about it is, you would want to invest some in equity, some in debt. So P2P should come within your debt bucket of your portfolio. Now, within the debt bucket, you could put money in fixed deposits, you could put money in government bonds, corporate bonds, all these sort of things. So I think depending on your age, and if you don't have you don't require money within, let's say, 3 to 6 months, then I would say P2P is a very good option, because a bank will give you like 4% or 5%. And here you could get anything from 9 to 12% in a very reasonably secure way. So that's a good alpha that can be added for retail investors.
Got it. Sure.
Thank you. So one thing that I really wanted to understand. So again, this again is a two-part question. One previously, I'm borrowing one question from the previous question that I asked. But so on basis, building up on the previous answer that you gave, right? When you said that basically majority of P2Ps have not seen that much of an issue or defaults in this thing, and returns of investors have not been affected that much. So
sorry, not majority. I meant a few have done that, and many haven't actually.
So many haven't. For many P2P,
I think many P2P players have not been able to deliver well on risk management, which is also the reason why I think that industry has not grown as much as it should have.
Understood. Yeah. So how do you think regulatorily, or what measures do need to be taken so that this kind of risk factors can be reduced further?
Right. I think maybe if the RBI can make it more like, facilitation of portfolios. I think that because when RBI came out with the guidelines, I mean, it's great that they have a very open and open guidelines for P2P, but I assume many players interpreted it where the investor will want to choose each and every borrower that they want to select and give money to. But I think that's very difficult as a retail investor. I'm busy with my day job. Even in equity markets, I'm usually investing via mutual funds. So I probably would rather have like a mutual fund type of vehicle, which I would prefer.
Right.
So I think if that can be done in a way that is supported by the regulator and makes it easier, then I think this will really pick up.
So something like a debt mutual fund with a P2P as a portfolio, P2P borrowers as a portfolio.
Yeah, or like a small case, right, of debt, retail borrowers. So
this is really interesting. I think this should be explored more.
Yeah.
Coming to my next question, from your personal experience as well as what you have observed in market trends, what age group or what generation of investors have been the most keen on coming onto this platform? So assumption is that millennials coming into good money, like now at 30, good jobs, and maybe Gen Z also, right, who are now getting decent salaries. But apart from that, have you seen any anomalies over here, and how do you see the trends?
So I think when you talk about the alternative investment platforms and startups that have come up, their target audience is 25 to 40 years age bracket, who have a good amount of earnings, but who are also very digitally savvy. Right. And I guess they also haven't actually seen a lot of defaults probably, fortunately or unfortunately in their life. So, they are a bit more risk seeking. So I would say like for a lot of these platforms, that is the target segment. But I do feel that it's going to change. So, I mean, we adopted WhatsApp first and then our parents, right? So I think a similar trend will play out in investments as well. As sort of the younger generation gets educated, then over time, even the older ones will adopt it if they see value in the product.
No, definitely makes sense. And how do you think these kind of platform, what would be the right kind of a go-to market? So, for example, players like yourself, players like Faircent and a few other P2P players, Liquid Loans and all those guys, versus, let's say, guys like Cube Wealth, right? Who are essentially aggregating all of this and giving me a more diverse option. So, do you think that is a good approach versus an individual GTM? And what is your current GTM to find investors for this?
Yeah, so first I want to just make sure it's clear that we are working more like a Bharat Pay 12% club or a Cred Mint, where we are helping investors get access to P2P, but we are powered by another P2P on the back end. We are not a licensed P2P player yet. So I just want to make sure that's clear. But in terms of, I think your question, I would not say it's a either or. I think it's an ecosystem that has to develop. Okay. Right? So it's like when the equity markets developed, you required companies to want to raise money from the equity markets. You required brokers to do the trading. You required fund houses. You required banks. So, actually you require a lot of players to come together to build a market. And it's a similar thing where you can think of like a Liquid Loans or even ourselves or Faircent. So we are in a way the product manufacturers and enablers. The product is P2P. Then you have the distribution layer, whether it's a Cube Wealth or even Cred in a way is just a distribution right now, I would say. Right. So we require, and then the infrastructure to power lending is a whole different thing. So we need regulatory support. We require like distribution, product manufacturing, infrastructure, regulations, everyone to kind of work very well together for this market to develop.
Understood. Sagarika, over to you.
Aditya, the last question is, where do you see exactly the credit landscape of India going maybe 2 years down the line, right? Because a lot of evolvence we see is happening here, and even when it comes to Indians taking up on the credit capacity has been increasing. So where do you exactly see the landscape, and how are you at CreditFair trying to bridge the gap that India has?
Right. I expect. I mean, I continue to be very bullish on the credit landscape. Unless there's a sort of event that comes up again, I don't think there's any stopping the credit growth in India. Like I was mentioning, the whole embedded credit growth, I would expect that to accelerate in the coming 2-3 years. I would expect a lot more partnerships from platforms, partnerships with banks as well, because I think banks have also realized that retail lending is not something that they are the best placed at. So I think on both sides, I would expect a lot of partnerships, and I would expect players like us to be that layer in between, really connecting the banks as well as retail investors and large NBFCs to the entire embedded lending opportunity. So that's where I think CreditFair comes in. And we would want to we grew about 4x last year on year, and we look to continue to maintain that growth rate in the next couple of years. So we are targeting about a 15x growth in the next 2 years. And eventually in the next 5 years, serve at least 1 million Indians and help 1 million Indians move up the credit ladder.
That's amazing. Thank you so much.
15x, which is really great.
Yeah.
With that, I think we'd like to thank you so much for joining us, Aditya. It has been a really insightful conversation, and we've learned a lot about your experiences as well as the credit landscape of India. Thanks so much. It was a pleasure.
Thank you for having me. Thanks so much.
Thank you.